Hello everybody and welcome to Mind of the Manager. Once again we're doing this on a virtual basis and things we need to do in this COVID world, but it's not too bad. It gives us flexibility. We have virtual meetings every day in the office, joining our offices around the world and wherever I am in the world, and it works very well for us. So we hope this works well for you. We do miss the personal interaction, and hopefully in the not too distant future we'll be able to get together again and do that. I'm here in Singapore, where I've been based for the last 13 years and spent most of this year here with a team in Singapore. Looking forward to getting to Cape Town. I've had another grandchild born on the 8th of September. He's in Cape Town, and I expect to get to Cape Town later this year to see him. And maybe next year we'll be able to get together in person as well. I'd like to thank you all for your support over the years, and just to reassure you that Foord is still doing what it's always set out to do and look after a few people really well. So I'm really pleased that you are those few people that we're looking after. So welcome to the conference. I'm sure you're going to enjoy it. I just want to share with you that Foord Asset Management is turning 40, and it's been a privilege to serve you for those 40 years. And on reflection, looking back over those 40 years, a lot has happened. And yet, there are other things that stay the same. And our commitment to look after you and manage your money the best way we can remains the same. And when I started the business, I wanted to manage money and not people. So from the start, we had a commitment to be small. We didn't want to be the biggest. Unlike a lot of people in the industry which are asset gatherers, we just wanted to look after a few people really well. And I can be proud of the fact that our team has been able to do that, and we can hold our hand on our heart and say that we have stewardship, we have the investor's best interest at heart, and we continue to stay small, and we run a boutique. We have 4 managers in Cape Town, 4 managers in Singapore. They're part of a multi-councillor system, which has lots of good attributes, and I'll talk about that at another time. But I'm very proud of the team we built up over the years, and they follow the same methodology and principle that I believe in, and that is you need to look forward, you need to try and understand value. We are investors, not just shares people. There are other assets which do well, and value investing to us is a forward income stream that we can acquire at a great price. And we've also learned that risk is very important. So we're managing risk, not just money. And you can see that in our portfolio construction, and you can see that in our results over time. So those that have been with us for 40 years are retiring comfortably. I'm often asked, what are the things that keep me awake at night? Well, it's a lot of things. Worry is what we do permanently, and there's so much to worry about in this world. And I just want to mention a few things that are worrying us at the moment. And to talk about, what keeps me awake at night. Well, in the early days, we used to joke about the fact that I slept like a baby, and people were a bit shocked like that. But when I explained to them, I woke up and cried, I got a chuckle out of them. And it's like that now. Who would have known we're managing risk, and we concentrate on risk. So when we're talking about worrying and staying awake at night, it's about risk. There's risks all over the place. And who would have said 5-10 years ago that health was one of the risks we needed to worry about? And look what's happened with COVID. And it's changed the world, it's changing the way people live, it's changing the dynamics of lots of different things quite dramatically. And sometimes in a good way as well. It's not just all bad. And how people adapt and change with risk creates opportunity. But the perennial problem for investors is inflation. So it's been a focus of ours to try and get inflation-beating returns. And we've been through a period of deflation. I went and spent several months in Japan 12 years ago trying to understand deflation, and came to understand that it's actually not such a bad thing for society and for economics, but it's a terrible thing for governments. And that's why you're seeing the governments fighting deflation, because deflation affects the tax stack and the ability for governments to spend money and buy votes with the tax stack. So we've actually been fighting deflation, or the Fed, etc., central banks have been fighting inflation, trying to promote inflation, and they've been fighting deflation. And I think we're getting to the point now where they've been so successful in fighting deflation, there's a big inflation looming. And we see inflation in lots of different places. We see it in the CPI numbers, but everybody's inflation experience is much higher than the CPI numbers. And you get into the detail of it, but some of the CPIs are adjusted for a better experience. So because your iPhone is costing the same but giving you a lot more product, does that mean that the inflation rate's gone down? Well, some measures of inflation would say so. And that's partly why, and other manipulations, but that's partly why the registered number on inflation is not necessarily the same one that we're all experiencing. So inflation's my number one worry. Undershot a little bit now, and I'm not quite sure how long it's going to undershoot. But the fact that the Fed's not worrying about inflation and trying to say it's not that important is itself a big worry. So that's one of the key things that worries me. And that brings me to the Fed and the system as a whole. We've got very low interest rates, and it's destroying capitalism. It's very difficult for investors to work when your benchmark return is zero. And the Fed's talking about getting 2% inflation, which to me is a terrible thing. 2% inflation, the dollar becomes worth 25 cents in a person's lifetime. That's not price stability. That's not what the Fed should be doing. But keeping interest rates near zero for as long as they have, trying to understand the value of assets when you price by the interest rate or the return that you can get, means there's an enormous amount of misallocation of capital in the system. And you're seeing problems crop up in lots of areas. So that's the other big worry for me. And then geopolitical risk is always with us, and it's very difficult to get a measure on it. And the continuing and obvious and in-your-face confrontation between China and the United States is not healthy. And we're seeing some collateral damage in our China investments on that, just on sentiment. China itself, I'm not that concerned about. I think it's a command economy. You can't try and measure it or score it the way the West do. I think they do a lot of things very well there. They do have the interests of the people at heart. They are running a dual system, not just in terms of Hong Kong, etc., but also in terms of capitalism and socialism. And it's not in their interest to kill the technology companies. And they want that growth, and they need that growth. They need the capital structures to get that growth. So it does get out of hand from time to time, and the recent pulling back and control of certain items and misbehaviors, some would believe, on the Chinese side, I think has been handled well. And a lot of the things that they're doing, the West is trying to do as well. You're seeing a lot of control of the big tech companies in the West, and a lot of other issues that we've had in the West which haven't been dealt with promptly are being handled in China on a direct basis. So China is a risk, but I don't think it's as big a risk as the market is thinking it is, or the Western media is making it. And that's creating an opportunity. That means that the companies in China are at a bargain basement prices, and their forward earnings, I think, are going to be there. And it's not without risk, so we wouldn't put all our eggs in that basket. But I think China is a risk where the opportunity outweighs the downside.